Welcome to the Property Profits Real Estate Podcast, the show where real estate investors talk strategy, capital, deals, and growth with your host, Dave Dubeau.
So you've heard of active real estate investing, you've heard of passive investing, you know about single family homes, you know about multifamily and industrial, all that kind of good stuff. But I got a question for you. Have you ever heard of fractional co-investing? I've done about 1,500 of these interviews, and I think that's the first time I've heard that term mentioned. And today, our special guest, zooming in from the beautiful city of Baltimore, Maryland, Brian Davis knows a thing or two about fractional co-investing. Brian has been in and around real estate for quite some time. He's been an active investor. He's been a passive investor. And, when he first heard the whole idea about creating passive income for real estate, he ended up taking that very, very seriously. So, Brian, welcome to the show. Great to have you.
Dave, thank you so much for having me.
My pleasure. So, Brian, you just got up back home off the boat from a little, I believe, did you say 10-year hiatus living overseas?
10 years living overseas, yeah.
Nice. Wonderful. Well, welcome home. And tell me a little bit about how you were able to do that. How were you able to live overseas for all those years? Were you doing like a lot of people are doing, teaching English as a second language, or was the real estate keeping things afloat financially for you?
A little bit of both. My wife worked at international schools around the world.
Nice.
So, when we left the U.S. in 2015, we thought that we were just going to have a little 2-year adventure in Abu Dhabi, and that we would just step right back into our lives. So we rented our house out to renters for a 2-year lease. We rented it furnished with all of our stuff in it.
Yeah.
Put a bunch of our other stuff in the basement. We figured we were just
just a little
into our house.
2-year.
A little jaunt.
Yeah.
And then, of course, 10 years later, we were still overseas. So, we ended up, selling that house at a certain point and, we gave away all of our furniture. And
you didn't care anymore, right? Yeah. It loses its meaning after a while. Well, very cool.
Yeah.
So prior to taking off, were you actively involved in real estate, or was this something you developed as you started traveling?
Yeah, no, I had a rental portfolio of, I think at that point it was 15 properties in my as an active investor.
Like houses or multifamilies, what were you investing in back in the day?
Those were single family rentals.
Got it. Okay.
And, I had owned some other properties in a previous job, or working with a hard money lender, and we partnered on some deals together. But by that point, those were done, and I just had that portfolio of about 15 properties that I owned directly with no partners. And we moved overseas, still had those properties, and I realized, living across the world in Abu Dhabi, that I had really been subsidizing those properties with my time and effort and labor, and there's a story occasionally on my third date with the woman who's now my wife. I had her over for dinner at my house. It's the first time she's been there. I make dinner for her, watching a movie. And then at 9:00 at night, there's this banging on the front door. And there is my tenant who doesn't speak English. He showed up with his cousin who spoke a little bit of English and hands me this big fat envelope full of cash to catch up on his back rent.
Oh, wow. Okay. That was a way better story than I thought.
Well, he wasn't wielding an axe. So that was good, right? That was something.
Okay, yeah. A big envelope of cash, those kind of knocks on the door. Those are better. Yeah.
Right. Yeah. So that was okay. It wasn't a chainsaw, right? But, the woman who became my wife, Katie, she's giving me the side eye and looking at this, and she's like, what's going on here? Who is this guy? Why did he show up with this sketchy thing of cash? But, and that was one of the better ones. But I had all kinds of other bad experiences. I was walking through an abandoned house once, the trash was 3 feet off the floor. It was stacked so high. I literally stepped on a homeless man by accident.
Oh my God.
Not seeing him, buried amidst all the trash in the property. I had all kinds of those horror stories. Anyway, I had been subsidizing these properties with my time, even though I had had a property manager before moving abroad. I had really been the one coordinating with contractors.
And you learned that quickly, not living there anymore. Yeah.
Right. Yeah, exactly. So anyway, long story short, I got rid of all of those properties at a certain point. And the returns, especially after factoring in my time that was putting towards those, the returns were terrible on them.
Mm.
And some of that is that I had made a bunch of mistakes when I was in my 20s and bought those properties.
Yeah.
But it was around that time we had been selling forces at that time in my business, teaching real estate investing. And our core students kept asking us, hey, I'm not ready to go out and buy a rental property by myself yet, but I want to get involved. Can I just partner with you guys on a project that you're doing? But at that point, not only was I not buying rental properties anymore or, actively investing, I was selling them, right? I mean, I was getting rid of them. But I had been investing passively in real estate. So we did a couple pilot deals with some of our core students, first single family rentals. And then.
So at that point, were you still working with the other company and doing teaching and training and that sort of thing? Or was this kind of.
So in 2016, we started our business, Spark Rental. Now, at this time, it was a very different business model than what it is today. So,
me being you and your wife, or you and some other partners?
A partner and I, who had worked together for 8 years at a different company.
Got it. Okay. Yeah.
So anyway, we started experimenting with going in on passive investments with our students, and that was successful. So we ended up opening it up to the public as a membership business, as an investment club.
Okay, so that's where we get into the whole fractional co-ownership concept. So maybe explain big picture how that works.
Absolutely. So we are an investment club in the old school sense of the term, not in the way that some marketers abuse the term today to just talk about their email list or something. We get together once or twice a month on a big video call. We bring in an operator who is going to pitch their deal to us, explain their deal. And my partner and I, we pre-vet these deals, but we want to be very clear to our members that it's on all of us together to vet these as a club, right? That we're not like vetting them for you so that you don't have any responsibility anymore. I mean, we are a club that goes in on these together.
Kind of votes on yay or nay if we're going to invest in this deal, or how does that work?
It's not a vote. It's an opt-in or not. So we bring in the operator, we all grill them together with questions, we kick the operator off the call, and then we have an internal club discussion about the deal, talk about what we like about it, what we don't like about it, or the risks as we see them. And having 50 sets of eyeballs on these investments is really helpful for risk analysis.
Yeah.
So then we email everybody who couldn't make it a link to the recording and a simple opt-in form and say, if you want to opt into this deal with $2,500 or more, here's the form, fill it out, let us know how much you want to invest. And then from there, we form a joint LLC. Everybody gets listed as a partial owner of that LLC, proportionate to whatever they invest. Right. We open a joint bank account for that LLC that everybody gets viewership access to. Mm-hmm. And we invest as one LP in the deal, as that joint LLC. So even though each person is investing $2,500, $5,000, $10,000, whatever they want to invest, collectively we're investing normally in the $400,000 to $800,000 range. So
you probably get a little bit of preferential type returns and whatnot with that.
We often get better terms. A higher higher preferred return, maybe a better profit split, that sort of thing. If it's a private note, a better interest rate, et cetera.
Yeah. Okay, very, very cool.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
So a couple of questions come to mind, Brian. Question number one is, does it require that all of the club members be qualified as accredited investors to do this? Or is there a loophole because they're part of a club? Or are they paying like a nominal membership fee? Therefore, they can, how does that legality side of things work?
That is a great question. So at one time, we were planning on. So let me back up a second. Every investment that we make is open to non-accredited investors, or almost every investment. Yeah. And even the ones that are technically only or accredited only, they're still 506B syndications. It's just that the operator requested that only our accredited members participate.
Okay.
We looked into doing 506c investments for just our accredited members, and it was not practical. The accreditation process for the joint LLC itself was not practical. That being said, as we've grown, the way we've approached this is we've gotten to the size where we can now go to operators who normally only allow accredited investors and say, hey, we're investing 400 to 800 grand at a pop. Typically we are interested in what you guys are doing. We think we've heard good things about you. We would like to invest with you, but we would have to work out some kind of custom investment with you that will allow our non-accredited members to participate. So that could be a sidecar deal that is structured as a 506b syndication. We did one of those a few months ago. It could be a joint venture partnership with the operator. We did one of those recently as well with another operator who was normally 506c only. But we went in on one of their deals as a partner, basically, as a silent joint venture partner with them on the deal. We could structure it as a note, as just our company lending their company money,
right,
at a fixed interest rate or at a variable interest rate based on the performance of the deal. Right?
Yeah. Okay.
So the returns could be structured similarly to a fund or a syndication, but the legal instrument is a note.
Smart.
So
very, very smart.
Yeah, that's a point of pride for us. Even though a large percentage of our members are accredited investors, it's a point of pride for us that we also service non-accredited investors who, as you know, have way fewer options for passive real estate investments.
No, that's a wonderful option. Very, very smart, Brian. Hats off to you for coming up with that idea, you and your partner coming up with the idea. It sounds like it came up over time and as developed.
It evolved.
Years. Probably.
Yep.
Well, so I got a question for you. I mean, especially because it sounds like you guys focus a lot on multifamily. Multifamily has been a tumultuous asset class for the last few years. Did you guys get bit in the butt with any of the deals over the last few years, or have you fared pretty well with that?
So we do a lot of multifamily, of course. There's just more of those syndications and deals available in this space, but we also do invest in a lot of other things as well. Industrial, mobile home parks, retail, raw land. We do a lot of different stuff. But you are right, of course, we do invest in some multifamily, and we did get bitten a couple times by interest rates and cap rates just going through the roof in late 2022, early 2023. The value of multifamily properties, you look at the Freddie Mac AMI index, multifamily value index, crashed like 25 to 30% in late 2022.
Or some people say it came to where it should be. But anyhow, I get what you're talking about.
Well, if you look at, so that's actually kind of an interesting thing. If you look at the long-term trend line, so it goes, way up above what the trend line should be. And then it crashed way down below the trend line and overcorrected, right?
Overcorrected.
And now it's slowly recovering back up towards the long-term trend line, which actually makes now, at least historically speaking, if you're looking at real estate cycles, now should be a pretty good time to invest in multifamily. That said, I never want people to think that I'm encouraging them to try to time the market. We are philosophically opposed to timing the market, and that's part of our thesis and our philosophy is dollar cost averaging. Every month, sometimes twice a month. New deals, putting small amounts in new deals. So that's how I invest in my stocks, right? Dollar cost averaging. It's how I invest in my real estate investments. Dollar cost averaging every month, slowly and steadily.
So you're coming up with new deals once or twice a month. Is that what I'm understanding typically for the club? Yeah.
Once or twice a month. Yep.
Cool.
And so to answer your previous question in full, we had, out of the 51 deals that we have done as a club, I think 3 of them were, catastrophic, and they were all from that vintage of, late 2022, early 2023 deals, where the operator, just made all the same mistakes that you've heard about. Variable interest debt or, short-term bridge loans that, just didn't have enough runway.
At the wrong time. Yeah. The timing was challenging.
Yeah. So absolutely. And that's part of the process as well. It was bad, a particularly bad time in the market cycle. But, that is also part of our thesis as well. As part of that dollar cost averaging is, inevitably some facet real estate deals will underperform, right? That's the nature of the beast. Some will overperform, and most will be somewhere in the middle of that bell curve. But if you invest in enough deals, then your returns have a chance to form that bell curve.
Yeah.
And that's a much easier way to sleep at night when you're just averaging out a whole bunch of these as
Like
numbers
you say,
on the
dollar
page.
cost averaging in real estate. That's hard
Exactly.
to do, but you guys have figured out a way to do it. So at this point, we're doing this interview at the end of May 2026. How many members do you have in your club?
We have a little over 350 members. I think we're at 353 members at the moment.
Very good. And is it a paid membership club where you join, you have to be vetted, and you have certain fees per month? How does the club itself work?
Yeah, there's a membership fee. It's $59 a month or $597 a year.
Mm-hmm.
There's no vetting process in the sense that we're like interviewing people to to see if we like them or not. Anyone can join the co-investing club. For deals, the only other cost for members is we all go in on paying the cost of maintaining a joint LLC.
Right.
So that is $75 per LLC that you're in. And that covers the cost of things like filing the joint tax return for the LLC, opening the LLC, keeping it alive every year, sending out, maintaining the bank.
So that's an annual thing,
not
a monthly thing.
Well, there's two separate costs. One is the membership fee for the co-investing club, and that's for access to new deals.
Got it.
And then the other is just the joint cost of maintaining a joint LLC, because that
once you're in a deal.
Once you're in, for the deals that you're in.
Is that a one-time $75 fee, or is that every month they're paying that?
That's annual. That's annual. Sense. And again, that's to cover the accounting and the administrative costs of that LLC. But there are no hidden fees. I mean, all of the returns flow directly through to members. So it's not like my partner and I are taking a cut of those returns.
You're not skimming off the top, right?
Well, right. And and it's not.
You got the membership, right? So that's
well, right. So we make our money through the membership. The $75 LLC fee, that's to pay for the cost of maintaining a joint LLC. Yeah. But we make our money on the membership. And, it's the notion of, taking a portion of the returns, it's not even skimming off the top per se. It's just a different business model, like the fund of funds model, which we don't do and we don't want to do. Or like co-sponsoring deals, the co-sponsor gets a cut.
Syndication fees and whatnot and normal deals. Yeah.
Right. So we didn't want to do that. We wanted this to be completely transparent, where, all of the returns flow through, again, we don't.
Plus, you're investing in the deals alongside with your members. So you're
absolutely. Yeah. I mean, we started this because, I myself wanted to put, $2,500, $5,000 a pop in these deals. And we knew that some of our course students, at the time we were selling courses, we're not anymore, but, we knew that they wanted the same thing. So, this was a classic case of, I had a problem that I wanted to solve for myself, and I knew a handful of other people who had the same problem and wanted to solve it. So, we just figured, okay, well, let's solve it together. But yeah, I think it's
brilliant. I think it's a brilliant idea.
Yeah. So no, I've got my own money in these deals as just one more member of the co-investing club. This is my personal real estate investing strategy. So I'm right there in the trenches as one more member.
So you've been living overseas for quite a few years. Do you have a lot of members outside of the States, or do they have to be American to participate in the club?
We have a couple members outside the U.S., not many, but that is possible. And you only need two things. You need a U.S. taxpayer ID number, which in most of their cases is an EIN for like a U.S. LLC.
Yeah.
And then they need a U.S. bank account. So that's it. If they have a taxpayer ID number in the U.S. and they have a bank account for their LLC, they're good to go.
No, that makes a ton of sense. Well, this is fascinating, Brian. Thank you so much for explaining how you came across this problem and solved it and turned it into something really quite unique. If people want to find out more and connect with you, where should they go?
Go to sparkrental.com. You'll see the co-investing club front and center there. We've got several options for joining, including a free option where you can just come and sit in on deal discussions and see how we vet these deals together.
Wonderful. Brian, thanks so much. This has been great.
Dave, this has been a lot of fun. Thanks for having me.
All right, everybody, take care, and we will see you on the next one.
Thanks for listening to the Property Profits Podcast. If you'd like to be a guest on the show, apply at daveinterviews.u.com.